This is Nightly Business Report with Tyler Matheson and Susie Guerin. Brought to you by
TheStreet.com, interactive financial multimedia tools for an ever-changing financial world. Our Dividend Stock Advisor guides and helps generate income during a period of low interest rates. Real Money helps you think through ideas for investing and trading stocks. Action Alerts Plus is a charitable trust portfolio that provides trade-by-trade strategies. Online, mobile, social media. We are TheStreet.com.
Global market rally from Japan to Germany to the U.S. What's powering stocks around the world, and can it continue?
Rebooting Windows 8. Microsoft does what no company wants to do: admit it needs to fix the latest version of one of its key products.
And are the days of tax-free shopping, sales tax-free on the internet, numbered? We've got both sides of the debate that's dividing the retail industry, Congress, and could change the way you shop. All that and more tonight on Nightly Business Report for Tuesday, May 7th. And good evening, everyone. Susie, another historic close on Wall Street today. Stocks sprinted from the open and really never looked back, like one of those horses in the Derby Saturday.
Yes, exactly. What a day it was. And it was historic, Tyler, on Wall Street. The Dow closed above 15,000 for the first time ever. And the S&P 500 also set a new closing high. So these milestones are another chapter in a remarkable year for the major stock averages. Powering stocks higher today, a batch of better than expected earnings reports, more stimulus from central banks, this time from Australia, and renewed confidence by investors that the U.S. economy is going to be okay. The U.S. rally came in reaction to strong stock performance in world markets this morning, and we'll have more on that in just a moment. But right now, here's a look at the closing digits on Wall Street. The Dow rose 87 points, closing at a record 15,056. The Nasdaq added 3. The S&P gained 8 points to 1625, its highest close ever.
And as Susie just mentioned, the historic highs reached in U.S. equities have helped jumpstart a global rebound in stocks, with bourses from Asia to Europe and beyond making record-setting gains. Our Louisa Boyason has more now from London.
Hi, everyone. It's pretty amazing what's going on global equity markets at the moment. We're seeing a lot of buying into U.S. stocks, as you know. We're also seeing a lot of buying into Asian stocks. So you're looking here at Asian stock markets, very, very green, especially today. We saw new 5-year highs being hit in Japan on the Nikkei, their main index there. This despite the fact that we still are seeing some soft economic data reports. The Japanese market players also coming back from a 4-day weekend. So you have to bring that into account as well. Now, looking at the European markets, very interesting, because when you look at core Europe, we're still seeing softness again in the economic data. So we're still contracting in that front. Some saying we might even have to revisit a recession type scenario. But nevertheless, the German market, Europe's core economy, hitting new all-time highs, levels that we haven't seen since before the financial crisis started unraveling in 2007. For Nightly Business Report, I'm Louisa Boyason in London.
Well, those international markets have been surging in 2013. Japan's stock market has done the best, with the Nikkei index skyrocketing 37% year to date. The major European markets in Britain, France, and Germany also up sharply. The one exception, China, its key index down 1.5% this year. Now, by comparison, the Dow has catapulted almost 15%. For more on the outlook for the U.S. and stocks around the world, Art Hogan joins us now. He's market strategist at Lazard Capital Markets. You know, Art, it's a nice round number, 15,000, but tell us, what does this really tell us about what's going on in the markets, this milestone?
Well, Susie, I think that's a really good question, and it's interesting. We really pay attention when we knock down these round numbers. When we pass a 1,000 mark, a 15,000 mark, it wakes a lot of people up to say, hey, this market continues to do well, and there's several reasons why. I think we touched on a couple of those. The U.S. economy is not going into a double-dip recession. I think, second, earnings have been better than expected in the first quarter earnings reporting season, albeit with lighter revenues than we'd like to see. But the third thing I think is the most important is we've got a real global synchronized central bank intervention in this economy. We've got central banks around the world pumping liquidity into this marketplace and hoping to stimulate the economy, and I think that's helping stocks probably more than anything else.
You know, Art, we looked at those numbers from Europe, and they would indicate that the sort of optimism is at least flickering over there. Is Europe out of the woods?
it's not out of the woods, but the ECB is finally coming to the rescue. So to the extent that the ECB is probably the last of the central banks to really start doing things very much like the rest of the global central banks. And Mario Draghi has been very forthwith with commentary, even as early as yesterday, talking about having to be more creative. The ECB just cut rates earlier last week, and they'll continue to look at things they can do. So they may not be out of the woods, but they're certainly in a lot better shape they were even this time last year.
You know, speaking more from portfolio management aspect, I mean, it's very hard to find value in these rising markets. And so you look to Europe, I'm sure there's a lot of value there, but there's also a lot of risk. Everybody's waiting for that other shoe to drop. So what are you doing in your client portfolios vis-a-vis Europe versus the U.S. stock market?
Yeah, that's a great question. And it's interesting, Susie, you and I have talked for years, and for a lot of those years, we talked about having exposure to Europe, having a portion of your portfolio, at least having, some exposure to Europe. What we really have done for the last 18 months is had, clients looking at less European exposure. And if you look at the first quarter earnings reporting season, that's certainly played out. What we've seen is those companies, some of those household names that have missed, Europe has been the reason. We don't think it's a strong enough economy to make that a core of your investments. And if you want to have international exposure, we would certainly prefer Asia or Latin America. And one country that we point to, Mexico, is doing some very, very good things. So I think on the mend, but not yet a core part of our investment portfolios.
My next question was, of all the regions in the world, where would you be adding money incrementally now, assuming that you've got what you want in terms of portfolio allocation in Europe and in the United States? You just told me. Make the case for Mexico specifically.
Well, a couple things. The government's done a lot of things to right the ship here. They've got a very strong, robust banking system. They've got a lot of delevered balance sheets. And one of the things that they're doing right, and it's interesting, when we talk about immigration, one of the things you're going to find is one of the immigration problems that's fixing itself is the Mexican economy. You're seeing actually more people want to go back to Mexico because the jobs are plenty, there's growth, and it's not totally dependent on either agriculture or commodities. So I think it's, in terms of developing markets, emerging markets, Mexico is probably one of our favorites right now for 2013.
Lots of interesting information. Thank you so much, Art. Art Hogan, market strategist at Lazard Capital Markets. Tyler?
Well, one of the blue chip companies that have helped power the U.S. markets to record highs has been Disney. Shares closed at another all-time high today, that following a year's worth of very steady gains at the House of the Mouse. Courtney Reagan joins us now with news that should make Disney investors even happier. Courtney, some earnings numbers.
That's right, Tyler. It's not just the happiest place on earth for kids, but Disney is also making investors very happy. The world's largest entertainment company reported its fiscal second quarter earnings after the bell today, beating Wall Street's expectations on both the top and the bottom lines. For its second quarter, Disney reports earnings of 79 cents per share, 2 cents above Wall Street's expectations, on revenue of $10.55 billion. Better than Wall Street analysts' forecast of $10.49 billion.
Our parks and resorts had a great quarter that was helped a lot by some of our new investments, notably at Disneyland and in Florida, but also our new cruise ships and our investments in Hong Kong. Our cable networks, led by ESPN, also had an exceptional quarter, and we had improvement at our studio and in consumer products. So all in all, a great quarter for the company.
Disney, of course, also reveling in its early success for Iron Man 3. It's made already more than $700 million at the box office worldwide. I haven't seen it yet, though.
All right, we'll get some market reaction tomorrow when investors can react to those great numbers. Thanks a lot, Courtney. And a little later in the show, we'll look at the big business of theme parks and why the stocks from Disney to Six Flags are riding high.
Well, a run of earnings reports on that record day, and that begins our market focus tonight. Let's begin with Mondelez. Well, maybe you say Mondelez. Mondelez we'll go with, reporting sales and profits in line with expectations and a slight boost to its 2013 profit outlook. Mondelez sells Oreos, Cadbury's, Hall's Candy, among other products. Wheat Thins, you know them. Shares of Mondelez up most of the day, closing nearly 1% higher at $31.41, then adding a bit more on the after-hours earnings report. JCPenney surprised the market by reporting some numbers after the close a week ahead of schedule. The company expects its fiscal first quarter comp sales to drop more than 16%, with revenues lower than previously thought. Shares down 3% to close at $16.40. and they gained a little bit after hours.
Also, after the market close, Whole Foods reported profits above estimates. The company also raised its profit outlook for the year, reiterated its sales growth target of as much as 11%, and approved a 2-for-1 stock split. So it's no wonder that investors bought up the shares, soaring as much as 10% in after hours. They were up 1% in the regular session, closing at $92.80. Electronic Arts quarterly profits were shy of estimates, but revenues were in line. Investors liked hearing that pre-orders are high for the popular video game Battlefield 4, and the company's forecast for full-year earnings will come in above analyst estimates. As for the stock, up fractionally higher to close at $18.41 before jumping higher in after hours.
DirecTV said its first quarter results fell because of a currency devaluation charge, but core profits and revenue improved, pushing results above expectations. DirecTV's key Latin American business added more than 500,000 subscribers, and that was above estimates. Shares hit a new all-time high before closing at $61.95, up almost 7% on the day. And shares of Fossil popped on a 24% gain in profits, and the company raised its full-year guidance. Fossil sells jewelry, handbags, clothing in its own branded store, as well as in chains like Nordstrom and Neiman Marcus. Shares gained 9% on the day to $107.88.
Microsoft is calling for a do-over. That's after its all-new Windows 8 operating system failed to wow PC users, and sales have been disappointing. So the software giant is retooling Windows 8, promising some big changes by the end of this year. John Fort joins us live from Silicon Valley. So, John, will a revamped operating system make a difference? Will it revive the slumping sales of personal computers?
Well, Susie, history suggests updates to the operating system don't have a huge impact on PC sales. Last time a new version of Windows really goosed PC sales was a couple decades ago. And the changes coming with this update, codenamed Windows Blue, they might not be earth-shattering, but here's what to expect. It'll work on smaller tablets, screens smaller than 8 inches. Microsoft executives also say they've been listening to user feedback, so the old desktop and start button may be coming back as more prominent options, if I can read into that.
I think that the PC users would like to just get right to the Windows experience and not have the tablet user interface kind of get in the way. So they haven't announced yet exactly what they're going to do on the usability side, but I would think maybe giving you the ability to go directly into the desktop mode and not having to be distracted with the tablet stuff if that's not what you want to take advantage of right now.
He thinks so too. So this runs a bit counter to the approach that Microsoft CEO Steve Ballmer described to me in the fall, just before the Windows 8 launch.
So really, with one kind of experience for the user, you can span a device that looks like a desktop. You can work on a device that looks like a traditional laptop. You can work on a device that looks like a laptop where the keyboard detaches, or you can work on a device that never came with a keyboard at all and just looks like a tablet.
It sounds like some users actually do want slightly different approaches, one more like a traditional PC, another maybe more like a tablet. We'll see if these updates make business users and PC buyers in general warm to Windows 8. If so, it might at least slow the PC's decline.
John, thanks so much for reporting from Silicon Valley. You know, when Steve Ballmer introduced this product back in October, you remember he said this is a bet the company moment. And now to have to rethink it. Yeah, this is a big thing.
It's a company that has had a hard time staying out of its own way in many ways. When we come back, if online sales are taxed, would it change the way you shop? We've got both sides of this very hot debate that's dividing Congress, and it could affect you and your money. But first, let's take a look at some of the stocks, and there were quite a few that hit all-time highs today.
Tax-free shopping on the internet moved a step closer to becoming a thing of the past. The Senate easily passed a bill last night that requires out-of-state retailers to collect sales tax on anything bought online. Now the measure heads to the House. But as Hampton Pearson explains, passage there is not a sure thing.
Last year, internet sales topped $226 billion, up 16% from the previous year. And states lost an estimated $23 billion because they couldn't collect the taxes on out-of-state sales. That's according to a study done for the National Conference of State Legislatures.
The bill, as amended, is agreed to.
The Senate-passed bill gives states the power to require out-of-state retailers to collect sales taxes when they sell products over the internet, in catalogs, and through radio and TV ads. Big retailers like Walmart, Best Buy, and Target, with stores all over the country, already collect those internet sales taxes. But online retailers like Amazon and eBay don't have to collect them in states where they don't have offices or distribution centers. eBay opposes the bill. Amazon is on the side of states and their retail allies.
Retail is retail, a sale is a sale, and fair is fair.
Businesses with less than $1 million in gross sales would be exempt. That tax revenue would be sent to the state where the shopper lives. States must provide free computer software to help retailers calculate those sales taxes, and states must establish a single entity to receive the revenue to lessen the burden on retailers. Opponents are not convinced.
This isn't about simplification anymore. It's about the big box retailers placing their competitors, smaller competitors, at a disadvantage.
Getting the bill through the House will be an uphill battle. House Republicans are wary of anything that looks like a new tax. Critics also predict a tax collection nightmare for small businesses. For Nightly Business Report, I'm Hampton Pearson in Washington.
And back again to share their opposing views on the topic, David Quam, Director of Federal Relations for the National Governors Association, and Steve Del Bianco, whom you just saw in the piece. He's Executive Director of NetChoice Coalition, an advocacy group that protects online commerce. Gentlemen, welcome back. We had you on a couple of weeks ago. You behaved so nicely, we thought we'd invite you back this time. David, let me begin with you, and I want to begin by, we solicited some comments on our website, and I want to read one of the comments from Taylor Shoemaker. As an online retailer, I'm extremely concerned about the amount of paperwork this new law may create for my business. Doing a sales tax return for one state is already a significant amount of work. Multiply that by 50, and it could mark the end of my business's expansion. Your group favors this, David. Answer that viewer.
You know, every governor wants to protect its retailers, wants to protect its small businesses, and this bill does that. Number one, you've got the small business exemption, so you have to be doing $1 million of online business before it even applies. Number two, there's simplifications in here, including the fact that the states are going to pay for and offer software under this bill to make it much easier to do that. No governor wants to impose a big burden, but we need to level the playing field and make it fair for everybody in that retail space.
Steve, let me turn to you about leveling the playing field. The last time that you were on, you were strongly opposed to this measure. How are you feeling about it today, especially now that the Senate has passed the measure?
Yeah, thank goodness it's over to the House. The Senate rammed this through without a hearing, without a markup, and only one amendment by the manager himself. But in the House, the Judiciary Committee is going to take a hard look at this. And they're already telling us they're going to be sure that they don't try to impose brand new audit risks, brand new burdens on all of America's businesses to collect tax, not just for 46 states, but the amendment that was passed last night added 550 Indian reservations who can demand tax payments and audits from every American business as well.
So are you predicting that this is dead on arrival in the House?
Never predict anything is dead on arrival, but it'll have to pass scrutiny. It'll have to run the gauntlet of a Judiciary Committee that held a hearing last year asking some very tough questions. David earlier talked about free software. Well, the legislation he favors requires each state to offer up a single piece of free software for just that state. But America's businesses will have to pay their own dollars to integrate that software into their ordering, fulfillment, and accounting systems.
Let me pick up with David on that, because that was one of the questions that I was going to go to. Even if the states do supply the software that ostensibly will make it easier for companies to comply, many states have different taxes that apply to different items. Food is exempted in some states, clothing in others, like in New Jersey. That's one thing. But the other thing is, who's going to be on the line when the software that the states supply me doesn't work? Who's going to help me with that, David?
You know, there's certified service providers out there now who have been working with 24 states, who have been working on this for 10 years. This is not a new concept. It's actually a proven concept. And so this is not pie in the sky. This is actually something that can be done today. I've seen a demonstration of actually free software that works with every single major platform out there that people are using to do e-commerce. I think I'd like Steve to read the bill more carefully. I'm actually very confident that both the House Judiciary Committee and the House itself, when they look at commerce, are going to want to move forward because inaction causes problems in the marketplace. Action actually creates fairness.
Educate me, if you wouldn't mind, David, on that question of what happens in those states like California, where different municipalities have different taxing rates, and in states like Virginia, where certain food items are excluded from sales tax, or in New Jersey, where most clothing is excluded from sales tax. How does that get accounted for?
States have the obligation to make sure they are providing good databases to those software companies and to the public. That software, this is a basic database problem. This is not complicated software. Any major piece of software out there is probably more complicated than what you're going to need to actually get this job done. And so the idea that this doesn't exist is just not true.
All right, Steve, let me ask you this.
Thanks.
As you know, and we said in the package, that eBay is trying to raise the level of the small businesses that are exempt from just 1 million in sales to maybe hike it up to 10 million. Would that make you feel any better about this measure, knowing that small business would be better protected?
No, Susie, think about it. 1 million of gross retail is really just a 1 or 2 person company. I was on Capitol Hill today visiting House offices with catalog companies. Catalog companies doing $20 and $30 million a year in sales with a couple of hundred employees. They're the ones who were squeezed in this trap between, say, Walmart, Target, and Amazon, trying to squeeze down on their competitors who will never be able to afford integrating these systems. David said it's been proven. All that's been proven is that it's phenomenally expensive to take free software and glue it into all the different places in my process, on my information systems, and make it actually work, and to answer customer questions. And how about that incredible audit risk? 46 states and 550 Indian tribes can all punch a button and generate a demand letter requiring you to be audited for taxes maybe that you should have collected and didn't know you needed to.
All right, David, we have to leave it there. Steve, we appreciate your being with us. I have a feeling we're going to have both of you back in the future as this legislation moves along.
Happy to come back.
Thank you very much, gentlemen.
Thank you.
Still ahead on the program, why shares of theme parks may be sending investors on the ultimate thrill ride. But first, let's take a look at how commodities, treasuries, and currencies fared today.
Well, my days of riding roller coasters are over, mercifully, but for a lot of families and thrill seekers, summer means heading to an amusement park. But a lot of investors are getting their thrills right now, seeing shares of some of the nation's biggest amusement park owners and operators reach new heights. Jane Wells is live at Universal City in Hollywood with more. Hi, Jane.
Hey, Tyler, we're heading into Memorial Day. This is the time of year when theme park revenues start to get as exciting as a white knuckler. Turns out they've already been pretty thrilling, even if it seems the rest of the economy isn't. The economy has been on a roller coaster, but for theme parks, lately the coaster has just been going up. Take the Mattia and Perec families. They haven't been to an amusement park in 3 years. But this week they came to Universal Studios Hollywood, owned by Comcast.
We're a family that saves our money. You know, we don't throw away on like big cars and stuff like that, you know. We invest, you know, and then we can enjoy.
A lot of Americans are starting to have a whale of a good time. Across the country, theme parks are seeing consumers willing to spend hundreds of dollars for a day of fun. Comcast surprised Wall Street with a 12% jump in theme park revenues last quarter. Its shares hit an all-time high Tuesday. Disney shares hit theirs the day before. And analysts say these two companies have a supply of movies they can turn into attractions. Disney's planning a new Avatar land for Disney World, which analyst Matthew Harrigan predicts will pay off, just like Cars Land has helped attendants at Disneyland in California.
Going into Orlando and really doing a facelift in the Magic Kingdom, which they haven't done much with, literally in the last 4 decades.
But it's not just the big conglomerate. Six Flags has emerged from bankruptcy and reported a 32% jump in revenue last quarter. Its shares hit an all-time high 2 weeks ago, and so did those of rival Cedar Fair. What's amazing is that the companies have shown so much improvement in what many analysts consider a so-so consumer environment. Yet, as one park visitor told me, you can't stop enjoying life.
Do you feel more confidence going out?
Yes.
How come?
Because the economy is good and I'm having a good job back home, so yeah, we're good.
This afternoon, CEO Bob Iger of Disney pointed out that their park revenues really beat expectations. And he says, the consumer is improving. And Susie, it's not just the American consumer. We just saw a huge group of Chinese consumers here at Universal Studios Hollywood. So maybe everybody's feeling a little better. Back to you.
Everybody wants to have a good time, Jane. Thank you so much. Jane Wells reporting from Universal Studios. And finally tonight, if you were wondering where all the world's millionaires live, we have the answer thanks to a company that compiles data on high net worth individuals called Wealth Insight. So the #1 city for millionaires? Tokyo, with nearly 500,000 of them. Next up, New York City with 389,000, the only American city in the top 10, and rounding out the top 5, London, Paris, and Frankfurt. And China has 3 cities on the list. But the number of billionaires, most of them, Big Apple.
Liz, I don't have to worry about ever being on.
That's Nightly Business Report for tonight. Thanks for watching.
We'll see you tomorrow.
Nightly Business Report has been brought to you by
TheStreet.com, interactive financial multimedia tools for an ever-changing financial world. Our Dividend Stock Advisor guides and helps generate income during a period of low interest rates. Options Profits helps educate beginning and seasoned options traders. Action Alerts Plus is a charitable trust portfolio that provides trade-by-trade strategies. Online, mobile, social media, we are TheStreet.com.
I'm Susie Garrett with a Nightly Business Report news brief. The Dow closed above 15,000 for the first time ever, and the S&P 500 set a new closing high following a round of strong earnings and encouraging signs about the economy. The Dow rose 87 points, the Nasdaq added 3, the S&P gained 8 points. Americans cut back on using their credit cards in March. Consumer borrowing saw its smallest rise in 8 months, with the biggest increase coming from student loans. Home prices rose more than 10% in March from the same month a year ago, the largest increase since 2006. Microsoft is retooling its Windows 8 operating system after it confused users and may have hurt sales of PCs. And a new survey shows the highest concentration of millionaires live in Tokyo, and the most billionaires live in New York. Be sure to tune into Nightly Business Report right here on your public television station.